Hello everyone and welcome to the 89th episode of Kanga Crypto News, your weekly briefing for crisp, dependable updates from the crypto world. I'm Kuba, here to bring you the most important developments shaping markets right now. Before we start, a quick reminder. Everything you hear on Kanga Crypto News is researched and prepared by expert Kanga analysts using reliable sources only. But this is not an investment advice. We publish new episodes every Friday. If you want to stay on top of the most important moves that actually matter in crypto, subscribe and turn on notifications. Let's get into it. Let's start with Ethereum because a new institutional narrative is forming fast. Bitmine Immersion Technologies added 44.5 thousand Ethereum last week alone, spending roughly $130 million. That brings its total Ethereum holdings to about 4.11 million Ethereum, equal to roughly 3.4% of total circulating supply. At current prices, that position is worth around $12 billion. This makes Bitmine one of the largest single Ethereum holders in the world outside of major staking providers. The company, chaired by Tom Lee, has been very clear about its goal: build a long-term Ethereum treasury that generates yield through staking and validator infrastructure rather than just holding idle assets. What makes this move important is timing. This buying happened during a low liquidity holiday week when prices were under pressure and Ethereum flows were negative for major assets. Bitmine did not wait for confirmation, it bought into weakness. The bigger move picture here is that Ethereum is now being treated like Bitcoin was treated by corporates in previous cycles. Not just as a speculative asset, but as a balance sheet reserve with yield potential. This suggests a structural shift in how institutions view Ethereum, moving from a trade to a long-term reserve asset. And that brings us directly to Bitcoin. Strategy, formerly MicroStrategy, continued its long-running accumulation playbook. During the final week of December, the company bought another 1,200 Bitcoin for approximately $108 million. The average purchase price was around 88.5K per BTC. This purchase pushes Strategy's total Bitcoin holdings higher once again, reinforcing its role as the largest corporate Bitcoin holder in the world. The company has shown no signs of slowing down, even as prices remain elevated compared to earlier cycles. Strategy's actions continue to signal that they view Bitcoin as a core treasury asset rather than a short-term trade. It is a core treasury asset designed to outperform fiat over long-time horizons. While Bitcoin ETFs saw outflows during the same period, direct corporate accumulation tells us a different story. Some institutions are reducing exposure, others are locking it away. Next, let's look at ETF flows because the rotation there is telling. ETF data during the final days of 2025 showed a clear split in institutional behavior. Spot Bitcoin ETFs recorded roughly $19 million in net outflows, while Ethereum ETFs saw around $9.6 million leave products. In contrast, XRP and Solana ETFs posted net inflows totaling about $12 million. This is not a mass exit from crypto. It is a selective positioning. Capital is rotating towards assets where investors see asymmetric upside tied to regulation, court clarity, or new products. ETF flows often move ahead of price, not after it. And XRP is a good example of that dynamic right now. XRP-focused ETF products crossed an important milestone this week. Total assets under management exceeded $1.25 billion. At the same time, on-chain data shows XRP balances on centralized exchanges falling to roughly 1.5 billion tokens, the lowest level in over a year. Estimates suggest that ETF products alone now hold around 750 million XRP. Despite this tightening supply, XRP price remained relatively stable, trading between $1.84 to $1.87. This disconnect between price and supply is something long-term investors watch closely. Historically, sustained reductions in liquid supply tend to show up later in price, not immediately. Now, let's zoom out to broader market. The total crypto market cap slipped about 2.7% during the week, falling to roughly $2.96 trillion before stabilizing. Thin holiday liquidity amplified small moves, especially on the downside. Bitcoin dipped toward 87K before rebounding, while Ethereum briefly traded below 3K. This was not panic selling, but mostly positioning and year-end balance sheet cleanup. As liquidity returned, both assets recovered. By the end of the week, Bitcoin had climbed back above 90K and Ethereum reclaimed the 3K level. This rebound happened without major news catalysts. It suggests that underlying demand remains strong even when headlines are quiet and volumes are thin. Markets did not hype the bounce, they needed sellers to run out. Now, let's put the week into context. Overall, this was a week of quiet but meaningful positioning. Ethereum saw one of the largest treasury accumulation moves of the year. Bitcoin continued to be absorbed by corporate balance sheets. ETF investors rotated rather than exited. Short-term, sentiment remains mixed with prices sensitive to liquidity and macro signals. Long-term, the infrastructure story is getting stronger. Assets are moving from exchanges to treasuries, ETFs, and staking systems. That wraps the 89th episode of Kanga Crypto News. If you found this episode useful, like it, share it, and subscribe to stay ahead of the most important crypto moves. See you next week.
We are Kanga, beyond crypto.